This is the number one enemy to your family's wealth besides procrastination. Stay tuned to find out what it is.
23, yeah, 23, yeah, 23, 23, Pittsburgh, yeah, 23, yeah, 23, yeah, 23, 23, Pittsburgh.
So you get your paycheck, and like me, you probably look at your earnings before taxes and then your take-home pay and think, man, paying taxes sucks. It feels like the government is taking all your money, right? Well, that's exactly what I'm going to be talking to you guys today about in this video, how taxes impact your wealth and what you can do to reduce them. Now, before we get started, a quick disclaimer. I'm not a tax expert. I'm just sharing my experiences and the strategies I've learned to reduce my taxes. My name is Andre Grant. I've been a financial professional for over 5 years, and I started this channel to share the lessons that have helped me strengthen my financial foundation, because I'm really big on each one should teach one. So let's get into it. Most people don't realize how much taxes are draining their long-term wealth. Let me illustrate with a simple example. Imagine you take $1 and you double it 20 times. The result? Over $1 million. Sounds amazing, right? But now let's apply a 40% tax every time the money doubles. You might think you'd still end up with $600,000, just 60% of that million, but no, you're actually left with only $12,089 instead of over $1 million. Shocking, right? That's why cutting your taxes by even 10% or 20% today could mean millions in extra spendable dollars over your lifetime. Now that you see how much money taxes are eating up, you're probably wondering, what can I do about it? Well, let me take you guys over to the slides and I'll show you. Well, in Canada, there are 5 places you can put your money, so let's go over them. The first place are your non-registered accounts. This includes your checking and savings accounts, and any money earned here gets taxed immediately. The second place are your registered saving plans. This is done through the government, and these accounts are your RSPs, your RESPs, your RIFs, etc. These accounts defer taxes. You don't pay now, but you will when you withdraw the money later. A third place is property. Real estate can be a great investment, but it comes with property taxes and capital gain taxes when you sell. Fourth place is your tax-free savings account. You can contribute up to $7,000 annually, and any growth in this account is completely tax-free. And the fifth place is what we call a permanent tax shelter. This is a hidden gem. Most people don't know about it. It works similarly to a TFSA. Your money grows tax-free, but unlike a TFSA, there's no contribution limit, and it comes with added protection and cash value benefits. Most people put their money in the worst order. First, taxed first, then taxed later, and then finally tax-free. But what we teach here is you want to prioritize tax-free first, then tax-deferred, and lastly, taxable accounts. And by using this strategy, you keep more of your money and reduce your tax burden significantly. Also, starting a business can reduce taxes in several ways, because business owners have access to tax deductions and strategies that employees don't. So I'm gonna go over some key ways a business can help you lower your tax bill. So the first way is business expense deductions. So this is when you can deduct business-related expenses like office supplies, advertising, travel, and professional fees. If you work from home, you may qualify for a home office deduction. allowing you to write off a portion of your rent, utilities, and internet costs. Another way is income splitting. If your spouse or family members help with your business, you may be able to pay them a salary, effectively splitting income and reducing your taxable income. Another way is tax deferral. So unlike personal income, which is taxed immediately, a corporation allows you to retain earnings and defer taxes, keeping more money in the business for growth. If you use a car for business, you can deduct mileage, gas, maintenance, and even insurance costs. Also, self-employed individuals can set up health spending accounts or individual pension plans to get tax advantages on medical expenses and retirement savings. And lastly, there's capital gains exemptions. When you sell a business, you may qualify for the lifetime capital gains exemption in Canada, shielding up to $1 million in gains from taxes. So by structuring your income strategically and taking advantage of deductions, starting a business can be a powerful tool for reducing your taxes. Man, when I first learned all this, it completely changed how I looked at taxes. I hope this information was valuable to you as well. If you found this helpful, don't forget to like, subscribe, and share this video, because most people need to know this. They don't know about this. And if you want to learn more, just DM me on Instagram at Andre R. Grant, and let's build wealth together. Each one teach one, and see you in the next video.
23, man, 23, yeah, 23, 23, Pittsburgh, man, 23, yeah, 23, yeah, 23, 23, Pittsburgh.